Fausto Puglisi, president of Cyber Trading University.
Most people always focus on the past, where as a professional day trader, we just focus on the future. You can do very well in trading, and you don't have to have a good amount of movement for the stock to go up.
Welcome, everybody. My name is Fausto, and welcome to another podcast, the Cyber Trading Podcast. And we have a really, really good friend of mine that's coming on, known for a long time, Steve Primo, and looking really forward to have him on. He's going to talk a little bit about trading. We'll talk a little bit about how the market works and, basically what's going on, because this is like ridiculous what's happening. This market is getting like very volatile. We're going up, we're down. I mean, some people are swing trading here. We're doing some long-term trading. Day trading has been fun, but if you didn't follow what's happened over the course of the day, it does definitely put you in trouble. And we'll see how he feels on what he's seeing on his end. But Steve, welcome to the show. How you doing?
Hi, thank you, Fausto. Thanks for everyone here attending today. I'm doing great.
Good to see you. Good to see you, Steve. It's always great to have you again. What have you been up to? I haven't seen you in a while.
Just been trading, working, and doing more and more education for my students and people around the world.
Yeah, good. So how's that working out? I mean, I know you've been doing this for a long. How many years has it been now?
48 years, if you can believe it.
48 years.
Yeah, 48 years.
I thought I was old in this business. My God, 48 years. I've been doing it for 35. You know what? You're obviously doing something right if you're still around for 48 years, right? You still look great in that photo.
Thank you. Well, the thing is, maybe we can talk about it today, but when I first started out 48 years ago, my trading, I did everything that most people were taught. And my first 2 years, I struggled tremendously. I started out on the floor of the Pacific Stock Exchange, and I didn't think I was going to last very much longer. So I had some mentors that changed the way I looked at the markets and traded. And I think that's what sustained me now, going on 48 years.
Well, that was my question I wanted to ask you. I know a lot of people always want to know. I mean, you've been around for a while. They've seen so many presentations of you. And that's why we love having you gurus on here on the Cyber Trading Podcast. What made you pursue your career? I mean, for doing it for so long, I mean, what enticed you to get involved in this industry?
Well, the funny thing is, I had absolutely no interest in this. In fact, I didn't even know what this industry was. I had no idea what a stock was, what the market was. I was actually a musician. I had just left college with a degree in music, and I was looking for a summer job. And I was in downtown Los Angeles, where I live. I was looking to buy some instruments, a saxophone, and I walked by this building that said Pacific Stock Exchange. My father, who had always been interested in the markets, he had always seen for some reason some thing inside me that maybe it was with patterns or whatever. He thought I'd have an interest in it. He was always showing charts to me, always showing commodities, and I had absolutely no interest. As I walked by this building that said Stock Exchange, I thought, well, listen, this is what my dad's always talked about. I need a summer job. I have absolutely no idea what it is, but he could help me if I had any questions. I walked upstairs to the gallery and looked down at all the people yelling and screaming on the floor with all the paper on the floor. And I was hooked. I thought, God, this looks exciting. And that was in 1977, and I've been involved in the markets ever since.
Oh my God, you've been doing it ever since. So what was it like back then? And is it like what people always see on the pictures? Was it that chaotic and that crazy? I mean, like, what was it like to deal with those people down there, the specialists and all the runners and stuff like that?
Yeah, it was, in my opinion, it was the greatest job in the world. It was so exciting. I remember, boy, this must have been like 1978 or so. The market, I think, went up like 30 or 40 points, and it was crazy. That was like, oh my God, no one had ever seen something like this, or maybe 50 points. And the volume was unbelievable. There was paper all over the floor, and you just see how things have changed. And remember, there was no high-speed computers or internet then. I started out as a runner, where I would stand in front of the specialist booth, and he would bark out an order like 100 shares of IBM at a half. I'd write it down and walk over to the teletype operator, and she would put it up on the teletype. And that's how things got broadcasted. That's how it was done back in those days. And it was just really, really exciting.
Steve, I when I teach my classes, I always have to kind of bring everyone back to make them realize what technology is today, what it was then. So could you explain to everyone that, like, I want to hear what your way of explaining it, because we explained it all very differently. What is a specialist? And like what was the purpose of a specialist? What was the purpose of you being a runner? And what was the difference of being and having a seat on the exchange? Because, some people don't understand, what everyone's job duty is, because when you look at the bid and offer today and don't see a specialist and don't see a runner and see who's getting executed and what, like, how did it come to fruition?
Okay, well, the lowest of the low jobs was being a runner, and that's where I started out as just someone writing down the orders and taking it. But the process was, in the old days, let's say once again you wanted to buy 100 shares of IBM. Okay, in the old days, you would call up your stockbroker on the phone and say, I want to buy 100 shares of IBM at the market or a limit, wherever you wanted, and he would take down the order, maybe put you on hold or say, I'll call you right back. He would call the floor broker for that firm who handled the orders and say, listen, I have a client here who wants to buy 100 shares of IBM at a half or at the market, whatever you do. Then that floor broker would take the order, walk over to the person who specialized in making a market in that stock. That's where we get the name specialist. Right. So roughly about 50 or 60 specialists on the floor that had about anywhere from 30 to 60 stocks that they specialized in making markets. So he would walk over and say, I have a half bid for 100 shares of IBM, or I want to buy 100 shares of IBM at the market, whatever the order was. The specialist would have to sell them that order and say, okay, I'll sell you this. And then maybe 5 minutes later, someone would want to sell IBM and he'd buy it. So that's how he made a market off that bid and ask. But that's how, once again, antiquated it was in the old days. And the main specialists were the ones in New York, obviously, the New York Stock Exchange. So as a regional specialist where I worked, there were regional specialists in Chicago, San Francisco. There was also in Boston and Philadelphia. We had to either mirror the market that was made in New York by the New York specialists or make it better. So that way we could attract business. So that's really what we did. I later became a specialist, and I made markets in roughly about 60 stocks. I traded through the crash of '87, the bull market that followed.
I was going to ask you about that. Like, what the hell was it like back then? My God. I mean, like, people commit suicide, jumping off buildings and crap. I mean, like, nobody was answering the phone, because I remember that day. Nobody was answering the phone when you're calling, market makers or anything.
Yeah, it was the craziest day I've experienced in my life, and I wrote about it in my book. I have a book, it's a small book, a very easy read, that I really go into what it was like to trade during the crash of '87. There was basically no one had any idea what you were doing. They had no idea. I mean, there was just paper strewn all over the floor. I remember I looked at my clerk. I said, "Do you have any round number?" She goes, "Absolutely not. We're just long everything," because everyone was selling, and I would just, and what everyone did was play piggyback, where they would buy something and then sell it to another regional exchange. We were all just trying to get rid of it and sell it to somebody else. And I think I've said before, at the end of the day, I really came out relatively unscathed. I think I lost like $250,000, which was minimal at that time. Most traders on the floor lost millions of dollars. And at this time, that would be close to, 20 or $30 million, because that was back in the 80s. So I felt terrible, but after I talked to some of the other specialists, I felt, gosh, I didn't really get hurt that bad compared to everyone else. But the scary thing is that you had to make it back,
So who did you work for as a specialist? Did you work for a brokerage firm, or everyone's independent working for the exchange?
No, most of the regional exchanges work for a brokerage firm. The brokerage firm I worked was Donaldson, Lufkin, and Jenrette. I don't think they're around anymore, but they were a big brokerage firm that mainly handled a lot of retail orders. And I was the very first specialist post that they had, that they ventured into that line of work. And so they backed you. They put up all the money, and then at the end of the month, you took your cut or your split.
So now going way ahead, because I came in around '94. Okay,
right. That's right when I left the floor.
Yeah. That's what I'm saying. So you left the floor. The floor started dying out at when?
Well, I saw the handwriting on the wall, because when I first started as a specialist, you have expenses to make. There were, roughly you had to pay for your assistant, obviously your assistants. You had to pay for some of the order flow. You had to pay for just the cost of doing business, running like a little business. And it was anywhere between, once again, this was in the 70s. It's anywhere between $3,000 to $5,000. When I left the floor in the mid 90s, those expenses were up to $25,000, sometimes even $50,000 a month. Wow. So you had to cover that nut before you even got a paycheck. And I said, this is ridiculous. I could go work from home and make $5,000 or $10,000 on my own just day trading, and I wouldn't. And my expenses are minimal because I'm working at home. The only trouble was there was no such thing as working from home at those times. Remember, this was in the mid 90s.
Right.
there was no data feeds. There's nothing. I had to use the radio lines to put an antenna outside of my window. I was one of the very first people that actually left the floor and started trading on their own. And everyone thought I was nuts. But then they start to see the handwriting on the wall as well, the expenses and how difficult it was. And then virtually they closed all of the regional exchanges, and just New York was left. And now that's really pretty much gone the way of electronic trading. And it's just kind of sad because those days are gone now.
Well, you know what it is. The exchanges, I was a market maker, on the NASDAQ, and
Right.
that, and they just basically piggybacked off the NASDAQ. I mean, because they had the technology, because they wanted to get rid of the floor. They'd have to deal with people, expenses, and they just care about doing tickets, I mean, and they were held hostage, to the market makers, the specialists, and that. They're like, they want to make it a very far market, so they really care about themselves. That's why. Like I tell everyone, I hosted a party down in New York Stock Exchange. Eventually you're gonna be able to have bar mitzvahs and weddings down there soon. It's beautiful. It's gorgeous. It's a very great experience if you can do it. But what I try to always tell everybody is that, Steve, I don't think anyone experience, what is involved, when you are down there on the floor like you. I really envy a guy like you, because, some people don't realize that when you trade, that's where you really, really learned, and seeing like who screwed up, and who are the good traders, and usually the ones that are good, you won't hear too much about them. They're the quiet ones, and the bad ones, the ones that brag all the time and think they're the best ones since sliced bread. But, and I think that, and at the audience that's here right now has to understand that, like, you got to surround yourself with a good team of people, and you got to learn from it. A lot of these people like try to trade by themselves, and they can't do that. And that's where I want to lead into, why you going on your own. So now you're on your own, right?
Right.
How did that come into fruition when it came into what you're doing right now with the education?
Well, first of all, just to backtrack on what you said about the exchange, that's hilarious, having bar mitzvahs and weddings there, because the old Pacific Stock Exchange, the old one before they moved to a new building, they turned that into a nightclub, like a disco.
Yes.
So that's exactly, I know exactly what you're talking about. But anyway, I had had a very difficult time my first year or two as a specialist. I just couldn't make ends meet. And then I got on track. I learned how to be consistent. And I thought, well, this will be simple. When I leave the floor, it'll be just like bread and butter. And then I was right back almost to square one again, because being by yourself, not having that interaction. And also, so much of traders on the floor rely on that order flow, rely on advanced information that you don't get at home. And I had to learn an entirely different way of trading, which is very difficult once again at first. But using those things, the standard benchmarks that my mentors taught me, helped me to survive, because it was really difficult at first. And to be honest, it's kind of sad, but when I worked on the floor with hundreds of people, many of them were fantastic traders, unbelievable traders, made relatively huge amounts of money in a short amount of time. Not one of them is trading anymore, maybe just one or two other than me. Because they all gave it back, or they couldn't survive once they left the floor. So, your students or your people listening today, it is very difficult just trading on your own. But that's what we focus on, and trying to educate traders and get through that process.
So, just to let everybody, give everybody a little experience about you personally. Okay, everyone, like, I don't like to talk about the winners. They always took care of themselves. I always learn from my biggest losers. What was your, the biggest lesson, the most scariest situation you were in, being an actual trader? Because, what's happening right now is a lot of people right now are seeing what's happening with the market. And some of these stocks are down like almost 50%, from these highs. I mean, you see what, like everyone's still hooked on this NVIDIA. You see what's happening with, Google and Amazon. They're getting crushed. I mean, and I always tell everyone, your biggest education is, surviving a big loss. But what was your biggest, something you could tell somebody that you went through?
Oh, sure. Well, I've had a number of them actually when I first started, but one that I can remember that I haven't repeated that much is when I started to learn a little bit, and I started to basically break even, which I thought that was a major goal for me. I went on a vacation with my wife. We went skiing in Colorado. And, I was just remember, there were no laptops, there was no internet then. So I was just calling up and looking at TV in the market. And I just came to the opinion that the market was tremendously overbought and it was time to short it. So at that time, I was actually shorting the E-mini futures. And that was a long time before the mini futures. Actually, it was actually the futures, the S&P futures. I think the average, or I think the overnight maintenance was 25 grand per future contract. So they didn't have micros or minis or anything then. So I mean, I'm almost embarrassed to say this. I actually was calling from the ski slopes, finding out what the market was doing. And the market, I'd short something and it says, well, no, it's going higher. And I said, okay, well, short some more. And they said, okay. I finally got to the point where I was short about 4 contracts. And I was literally getting killed. I mean, literally getting killed, losing tons of money. I thought, I'm going to give away all this money. I can't believe it. And one day I went skiing and said, I'm not going to think about it. Came home, turned on the TV, and then the market cracked. And I made all the money I'd lost, and I was up tremendous. I think it was up like about 20 or 30 grand. And I go, this is unbelievable. I'm going to be retiring. I can just do this from home. And this is the greatest thing in the world. Well, by the time I got home and everything, the next couple of days, I gave it all back and then some. And so it's just a classic story. And what I have found out what works for me, and this is what we teach our students, is that you have to always be in sync with the market. It's not about picking a top or picking a bottom. It's about going with the flow. And even though you may miss a great opportunity to buy at the low and a great opportunity to go short at the top, it's a numbers game. We're here for longevity. We're not here to have one good trade and then give it all back the way I did.
Right.
We're here to be not just to have a good 6 months, maybe a good year, but hopefully a good couple of decades. And by being in sync with the market, with the overall trend and the short-term trend, you will have that longevity. But what I was doing was telling the market, no, it's gone up too high. I have spoken, it's going to go lower. Or it's gone down too low. I have spoken, it's going to go higher. And like I said, that will work every once in a while. But trust me, it's very difficult, and you'll have better sleep at night if you're in sync with the trend. For example, everyone's talking about how terrible Tesla has been and how it's going straight down. Well, just through using our simple trend indicators, our students have been out of Tesla since the end of January. They knew that the trend was down, and this one was trading around 400. Okay, so that's how easy it can be.
Is it a buy now?
No, it's still the overall trend is down. Once again, I say, sure, you could buy it and pick a bottom here, but we're just a numbers game. We're just, until the trend changes, we'll either look to short it or we'll bypass it and look for something that we want to buy that isn't in an overall downtrend.
Right. It just came down so much.
Yeah.
A little bit of a buy here. I do own some of it now. I just bought it about 2 days ago, and it did trend down again today. So I want to hear your thoughts on it if you've been trading it. But I've been trading more like the TLRLL, the ETFs. What else I got? The TSLL and the TSLY and stuff like that. But they're getting pretty close. It's just sad how much these things dropped. But like you just said, but you learn though, you got to know when you get out. If you break these big support levels, you got to pull the trigger on it.
Yeah, it really, you really do. And you got, we don't tell students like, no, you shouldn't buy this, or no. We never ever tell you what to do. I'm just sharing with you things that have high levels of consistency that as a mentor, I think this can help you. Now, if you want to buy it, by all means, go ahead. You may have picked the bottom. I don't know. I don't look for tops and bottoms. But this way, you would have saved yourself a lot of money, though. That's what we're looking at. And there are always things around that you'll be able to buy that are great opportunities. But it's up to you. We're just trying to really conserve your capital and to have you consistent, meaning that you'll be around for a long time.
And you know what? I think that has a lot to do. And that's what I've learned too, is being an institutional trader, being more of a, trading someone else's money, knowing that you got to be, you got to be responsible because you'd be out of a job. So, but there are people out there that think like, how are you going to beat these guys? Can you beat them, or could you join them?
Well, in my opinion, I used to think, we got to beat them. And I learned at a very early time when I was on the floor that everyone was looking at it like you got to beat the market, like the market was like your enemy, like it was the worst thing you could. And then all of a sudden I realized my mentors, who were specialists who had been around for like 50 years, they says, "Hey, Steve, I don't, you're looking at the market as if it's something you got to do battle with every day. But the market is really your best friend. It's the thing that's going to give you all the profits and everything. So wouldn't you rather be in sync with the market?" So that's our whole assumption, that we're trying to be in sync with the market and go with it, rather than say we're trying to beat it. And we're not trying to compete against some guy, the institutions. We're just trying to compete with ourselves. And, because the worst thing in the world is to get scared or doubtful or to be overconfident. And you have to compete with yourself to keep that fear and greed at bay and just say, focus on what is. And so that's really what we're about. We're not about, doing battle with the market or doing battle with the institutions or some other trading mechanism. We're just trying to do battle with ourselves so that we follow the rules.
So with that said, being around for so long, like, there's a lot of people freaking out right now. Okay. Yeah. So, and I always tell everyone that, listen, remember the people, on the way up, because you're going to meet the same people on the way down, because everybody, and when you meet, and if you could come back, that's how you know you're good. So, but there are a lot of people getting really nervous. They're starting out, they're getting into the market. Right. Some people, experience that through COVID and stuff. I mean, you and the biggest one I experienced was obviously is the financial crisis and so on. So what are you advising people right now, as in like, what's going on with the market right now? How do you handle it?
Well, if you are a beginner, I would just basically begin. I'd say, do not trade this market. It's not because of this market, but regardless if it's a straight up market or straight down market, we always advise our students just to paper trade first until you feel comfortable. But for right now, once again, with the indicators and the simple indicator, I can teach you today. I mean, as basic and simple as this.
Yeah, no, I want to see that.
We call it our buy sell line, because it tells you whether you should be a buyer or a seller. Now, this is a 50-period moving average. But this is the one thing that my mentors taught me almost 5 decades ago. And they said, Steve, it's as simple as this. If price is above the 50, I don't care if you're looking at a 5-minute chart or a monthly chart. If price is above the 50, then you should have a buyer's bias. If price is below the 50, you're either on the sidelines or you have a seller's bias. In other words, going short. That's rule number one. It's that simple. Looking at the spiders right now, price went below the 50 at the end of February. So you would have been out, the S&P 500 this entire time, or else looking to short it. It's that easy. Same thing with Tesla. Same thing with NVIDIA. Just go back and apply a 50-period moving average. Now, if you're looking at a 5-minute chart, do the same thing. And a little bounce we had earlier today when price went above the 50, you could have started looking for buy setups. Now remember, this is not a strategy. It's not a system. It just tells you what bias to have. And once you know what bias to have, then you can apply any strategy. It doesn't have to be one of mine. It could be yours. It could be someone else's. It doesn't matter. But that will give you that higher level of consistency. Now, obviously, this is just the basics. Trading is simple, but we have other more advanced ways. But this is something we tell all of our new students. Even I've told hedge fund traders this, and they go, "Gosh, this has saved me so much money." I said, "Yeah, it's very simple. It's not about picking tops and bottoms. It's about knowing what side of the market to be on." So just applying that simple rule, you can see in all these markets you would have been out, weeks, if not months ago.
Now, there's a lot of emotion. People just don't like to take a loss. They get into positions, they see it,
right, exactly.
Tomorrow, they're like, "Oh, maybe we'll come back," and this and that, and like then there are a lot of people in denial and so on. That's why I always tell everyone, listen, you might not want to learn from somebody like you or me, Steve, and stuff like that, but you can't be doing this on your own. And you know what? That's what I want to do. Could you show us a little bit exactly what you're talking about? Let me show you PowerPoint so everybody can see exactly what we're talking about. Let me bring that up for you. Hold on. Okay. Oops. There we go.
Can you see it okay?
Yep. There we go.
Okay, this is the very first strategy I learned. It really is. It's a strategy that my mentors taught me. And I'm going to just go fast forward here because Specialist Trading is my company. And I just want to share with you a disclaimer first, because even though I'm going to show you some performance results I'm going to give you the first 2 rules of the strategy. I'd love to give you everything, but unfortunately it wouldn't be fair to my students around the world who have purchased this method, but I'll give you the first 2 rules for entry. Okay. And remember, the performance results are not actual representation of future results. So these are strictly for educational purposes only. Oh, and also, if you'd like to follow us on X, there's our handle right there, abbreviation for Specialist Trading. Okay. Okay, so let's begin. What I want to talk about is what we call strategy number 4. The very first method I learned. I continue to use this to this day. I was trading with it earlier this morning on the E-mini futures. So let me show you some examples, and I'll share with you the first 2 entry rules, okay? All right, here's an example in Amazon. Someone looking at this, which is the beginning of the year, would say, well, we're in a downtrend, right? It's classic making lower highs, lower lows. But first thing, as I said earlier to Fausto and all of you, first thing we do is apply the 50-period moving average. And we ask ourselves, where is price? Where is price in relationship to that? Well, price is above, obviously. So that's the first rule. That means we're going to be a buyer. The second thing in this strategy is we look for price bars that close in the top 25% of their range. You see, when price is above the 50, that's telling you the overall trend is up. When a price bar closes in the top 25% of its range, it's telling you the short-term trend is up. So when we have these 2 things together, we have the first 2 rules that make up a buy signal. And on our platform, it's as simple. All you have to do is click on the signal arrow, and you'll see that was a buy signal. And then look what happened. Stock went up 20 points. See, it's that simple. It's really not any more difficult. Let me show you another one here. Here's an example in EA, okay? Electronic Arts. This was, once again, kind of a sideways market, no direction market, right?
Right.
But if we apply the 50 and we ask ourselves, where is price? Price is below. So even though we may think it's not doing anything, it's actually telling us the overall trend is down. Now that the trend is down, we want to look for bars that close in the bottom 25% of their range. Now, I know this one does right here, and I think this one does, but remember, there are 2 more rules left in this strategy, and they did not meet the requirements. But on our platform, if you just click it on and you click on signal arrow, you check your work and you see this one did. And then look what happened. It fell out of bed 28 points in the next day. Now, this is not based on any fundamental information. It's not based on interest rates, earnings, economic numbers, jobless claims. I stopped looking at news almost 5 decades ago. So I'm living proof that if you don't want to look at news, you don't have to. Once again, if you want to, feel free to go ahead. But I'm just sharing you. It's not required, in my opinion. And look what happened. It obviously gapped down on some news or some event. But isn't it funny how we knew a day in advance to get out? So that's basically the beginning. I have more slides, but we can discuss this. But it's very simple. My mentor said, Stephen, trading is simple. It's the trader who makes it more difficult than it has to be. When I started out, I had like 30 indicators on my screen. We didn't have chat rooms or trading rooms then, but I subscribed to all the newsletters. Joe Granville, all the Elliott Way, everything in the world you could think of, and then I had estimates, all the earning estimates of 60 stocks that I had to know. And guess what? I couldn't make a dime my first year. It just didn't work. It was too complicated. So my mentors taught me these simple rules. And I thought, this is too simple. This can't possibly work. And so I fought it all the way until finally I said, well, listen, if I don't start making money here, I'm going to get fired. So it actually started working for me. And that's where I started using this simple process here. And actually, if you don't think how powerful this can be, everyone listening, I'm sure you've had 10 or 20 trades. Go back and apply the 50-period moving average rule I just talked about. I can almost guarantee you that the reason why you lost is because you were out of sync with that. You were buying below the 50-period moving average and selling above the 50-period moving average. Okay. And remember, this is not a system. The 50-period moving average, it's just a very highly probable way of getting you in sync with the overall trend. Not to say that you can't pick some great bottoms below the 50 or great tops. It's just that we don't look for that. We just look for being in sync with whatever the market's doing. Does that make sense? Or do you want me to show some more examples? Or, it's up to you. I could go further.
Oh, no, I definitely get it. I mean, that makes perfectly fine. Richard, the question here, 25% wick is the wick?
Yeah, use the range is from extreme high to extreme low of the price bar. So I know some people think the range is the open to close. I'm old school. The range is the top of the bar to the bottom of the bar. And then you divide it by 4. And if you close in that bottom 25 percentile, that's the bottom 25%. If you close in that top 25 percentile, that's the top 25 percentile. So yeah, extreme high to extreme low.
Okay.
You want me to go through a few more? I can go real quickly here.
Yeah. Go see a couple more you got.
Here's Costco. Okay, this was and once again, someone could say, "Hey, we're in an uptrend," but actually, we were below the 50-period moving average, so we weren't going to do anything to the upside until this bar here. Now, all you need is really one bar, and it closed in the top 25%. So it was a buy signal, and look what happened. Went up 78 points coming into last month. Or this one right here in Cintas, looks like it bottomed out, right? But once again, now it's below the 50. Now all these bars are below the 50. So even though it looks like it appears, and it may have even bottomed out, we would tell our students, well, either be on the sidelines or look for this as a selling opportunity. Well, there's a bottom 25 percentile. The remaining rules are met, fell 30 points.
Must have been that must have been a day I didn't go to Costco, and the other one was a day probably I went to Costco.
Yeah. Quickly, another one, KLAC, above the 50, 2 buy signals right there, 95 points in 1 week. A range market, right? Nothing to do here, just get whipsawed in these. Well, actually, it's below the 50, even though it may appear to be a range market. Sell signal right here in the bottom 25%, 70 points in just 1 day, okay? An uptrend, a 4-hour euro yen, it makes no difference what market, it's a 4-hour, but even though it looks like it's going up, the overall trend is down. So that's actually a selling opportunity. Remember, we ask ourselves, where is price? That's a selling opportunity. 170 pips in the next day or so, about $1,700 per unit. Or a 15-minute chart of Microsoft. If you like to intraday trade, it's above the 50-period moving average on a 15-minute time frame, 5 points in about 30 minutes. And I think lastly here, we have a 4-hour chart of the Canadian dollar, 225 pips in just 4 hours, okay? So just some of the highlights of this method. It's a pattern recognition strategy. You just have the first 2 rules of this method. It's designed for traders looking to catch a quick momentum, as you saw, and it only uses one indicator, and you already know what it is. That's the 50-period moving average, okay?
Okay.
That's it.
All right. Well, if somebody wanted to learn a little bit more about this, how do we go about? How could they be able to get access to it or look at it?
Okay, well, if you don't mind, I can go through a little great promotional offer I have for all of you today.
Absolutely.
This is a great way to kick off 2025. What we're doing is for all of the attendees today, we have a great offer, a really good special. We're going to offer you strategy number 4. This is the method we taught you, all the rules, the complete course rules, all the entries, all the exits. But we're also going to offer another. This is the E-mini strategy 3A, which is a entirely different method built on entirely different rules. Just a couple of examples here. Here's one in Lulu taking off. There's an entry point using this. Here's another one in ROP. Went to the downside where you could have entered. So what we're going to do, I'm sorry.
Rich from YouTube is asking, so wasn't that clear? 25% of the candle body, or is it top of the wick to the bottom of the wick?
Top of the wick to the bottom of the wick.
Okay, there you go, Rich.
Entire range, top of the wick to the bottom of the wick. Now, also everything that I showed displayed was on a platform I developed with ProTrader Strategy. So what we're going to do as an extra bonus, we'll give you 6 months absolutely free. So you can automatically click on those strategies and you'll see where the signals are. Even though you learn all the things, you'll know exactly where the buy and sell signals are, okay? And then lastly, you get a signal scanner with that PTS Primo charting platform. So you can scan nightly basis for all this. Oh yeah, I forgot to mention, you'll also get my free book, The Secrets of a Stock Exchange. This is what I tell you about, Rich, where I go into roughly and talk about what it was like on the floor. I mean, I really tell a lot of really detailed information about how crazy it was on that floor and how some of the guys, as you had said earlier, were actually contemplating suicide. That's how
I don't think people realize how crazy it was, especially a lot of people hate to say, well, alcoholics. Because I remember a lot of them here in New York, they would just come out at halftime, lunchtime, they call it halftime.
Same thing.
But it was a very stressful job. I mean, people realize it. Like, you really, really haven't, it's very stressful to be a floor trader. And like, for you, where you be out today, I mean, the best education I get. I said, listen, I would have worked for free. And you know what? Like, the way I learned how I got into it is I was a cold caller. I had to be a stockbroker to get like you are a runner.
Right.
Hated it, but that's how you learn.
Yeah, there was a guy on the floor. He was a specialist. At the end of the day, I think he lost $2 million which once again, by today's standards, I mean, sure, it's terrible, but you could make it back okay if you had enough savvy. But in those days, 2 million was like about 100 million almost. And the regional exchange was in downtown Los Angeles, and he lived in Santa Monica by the ocean, which was a good 15 miles. He walked all the way home. He was so depressed he didn't want to go home and face his family. He walked the entire distance because it was so stressful and he was so depressed. And so I go into detail a lot of this stuff and it's an easy read. It's not like a 200-page book, or it's an easy read, but I really go into detail. And also I talk about how my mentors changed my thinking around in that. So anyway, this is included as well. And so basically we call this the 2-pack. You get strategy 4, E-mini strategy 3A, 6 months free of the platform, along with my book. And normally this would cost close to over $7,000. We're going to discount it today for all the people here for $297. Okay, so you're going to save over $6,800. Okay, so $297 relatively for getting nearly 5 decades of information is really inexpensive. So here's if you want to really invest in yourself, take advantage of this great offer. Just contact my site.
Hey, listen, the cheapest trade you can make is a couple $100. I tell everyone all the time they're doing that. So and people don't realize that it's a lot of work to train somebody, and it's a lot. And you need to try a little bit of everyone's stuff. But everyone, just make sure you take a try out when you get a chance. And you know what, we'll have this recording, and we're also going to be doing another big event also. But definitely check them out with Steve Primo. Appreciate it. Steve, a couple of last minute questions. So regarding about your trading style and everything else, I mean, there's a lot of people here don't realize why it's so important to learn this style, but what have you seen that the biggest mistakes that, traders been making, new traders, other than what we just said about not getting educated, that are making in today's markets that they have to look out for?
I think the biggest mistake, and once again, I'm not putting myself above this, I did the exact same thing. I think the biggest mistake is when you take yourself out of the game. And what I mean by that is you have a great teacher or mentor, someone such as you, Fausto, or myself, but then you rely on them too much to tell you how to trade. Because I think ultimately every trader has to leave the nest and you have to make your own trading decisions. And so I think so many students say, well, I'll go to that chat room, I'll do exactly what he's doing, or I'll listen to this guy on TV and do exactly what he said. Or I'll use this indicator, which I have no idea what it's based on, but it just spits out buy and sell, and I'll do whatever it says for me to do. When you do that, you're basically telling the markets, I don't know what to do. I don't have enough information. I don't have enough experience. I don't have enough courage. So I'll let you decide. And then if it fails, it gives you a great out. You can always blame that rather than saying, well, I tried my best and I failed. So traders fall into that trap. I know I did. And you have to. Yeah, you have to learn from someone. You have to have a mentor or teacher. But then once it's time that you've fully understood everything, you have to go out on your own and make your own trading decisions. So this is what we tell our students, like, listen, we're here to educate you. This stuff has worked for me. It's helped sustain me for 5 decades. Hopefully it can do the same for you, but ultimately you're going to have to make your own decision. I'm not going to sit there next to you and tell you what to buy or sell. Yeah.
And what would be some advice, last minute advice you give anyone that's looking to get into the trading business right now? Because there's some new people in here, or what do you expect the market's going to be doing with that said?
Well, I would say the most important thing, whether you're a brand new trader or whether you've been trading for a while but are having some difficulty, is to do a little soul searching and find out, there are different styles of trader. There are short-term traders that trade intraday. That's kind of the way I was taught and what I first started at. There are intermediate traders, which are like swing traders that hold their positions anywhere from a couple of weeks to months. And then there are investors. One of the biggest pitfalls most students make, especially in the beginning, is they see themselves in the wrong category. They think, oh, I'm a day trader. That's what I want to do. It sounds exciting. It looks sexy. I want to do that. And they can't pull the trigger. I've had so many students that will teach them something and they just don't feel comfortable. And then when we talk with them, they understand that finally they're really not meant, they don't have the persona or the attitude to be a day trader. They're really more of an investor or a swing trader. That's what feels comfortable for them. So you have to do soul searching and find out what makes you feel comfortable. Do you like to trade 20 times a day, or do you like to trade maybe once a month? Everyone's different. So no two traders should ever trade alike. You have to find what makes you feel comfortable. Because I can have a tremendous system, a tremendous strategy that goes back 20 years and produces phenomenal results, back tested, and then you trade it and you'll lose money because you don't feel comfortable trading it. Maybe you trade only once a month and you say, I can't do this. This is ridiculous.
Right.
Or maybe it trades 20 times a day and you say, I can't follow the market like this. So you have to find out what makes you feel comfortable, then find that category. And then from there, it's a lot easier.
And then and like anything else, it didn't just take time. You can't just jump into it, but it's definitely going to be a learning experience because the way the market's been going on. I mean, especially with this new president in there, I'll tell you, there's been a lot of action that's been making the market extremely volatile. I mean, we had a huge rally going up, going down. I know a lot of people want to start getting involved into it, but like we always say, Steve, you got to learn before you could earn. You know what I mean?
Exactly. You got to learn. If you haven't taken the time to learn how to trade, the market is a very expensive way to learn how.
Very expensive. it's like saying I want to go to the casino and I want to play baccarat. I'm like, I don't even know how to play blackjack. I'm like, I hate to compare it to gambling, but or throwing someone in a car like, hey, I just got my driver's license. I mean, I told my driver's license. I have a 16-year-old who's got to take his permit, and let me tell you, that is not the most funnest experience to teach a kid to go in a car.
Good luck.
Yeah. Well, it's like trading. I tell them, but it's got to be, you got to do it the right way. Because I just gave him the keys, end up happening. It's the keys for his coffin, and that's what happens with trading.
Yeah.
So it's a very big failure rate. But Steve, thanks for coming. I really appreciate it. Thanks for being on the podcast, the Cyber Trading Podcast. Everyone, if you're listening in, we will get this recording out. You guys will be able to watch it. We'll get some quick shorts, some highlights of it, and make sure you take Steve up on his offer. And reach out to him and his company and his staff over there. He's been around for a long time. Wouldn't have him on here, after 45 years if he didn't know what he was doing. Right?
Thank you, Fausto.
Steve, thanks for having. Enjoy the rest of your spring and summer, and everyone else. We'll see you back here next week. All right. Thanks for listening here at the Cyber Trading Podcast.
Thank you.